What is a federal tax lien and how can it be resolved? Owning a tax resolution firm has given me firsthand insight into the tremendous stress and uncertainty that tax issues can bring. One common issue that many people face is something called the federal tax lien, which can complicate financial stability and create a significant amount of anxiety. Tax relief firms like ours are dedicated to helping individuals manage and resolve such complex tax matters. Our expertise in navigating IRS procedures enables us to alleviate financial burdens and to prevent more severe consequences. In this 3-part video series, we're going to delve into the topic of federal tax liens. We're going to answer 3 questions. 1. What is a federal tax lien? 2. Why can it be a serious problem? And 3. How can our specialized services help you resolve it? So let's begin. Part 1. So what is a federal tax lien? A federal tax lien is a legal claim by the government against your property. It can occur when you fail to pay a tax debt. And these legal claims can affect a wide range of your assets, including real estate, personal property, and financial accounts. Essentially, the lien serves as a way for the government to secure its interest in your property as collateral for the unpaid tax debt. Now that we've defined what a federal tax lien is, let's take a closer look at what a federal tax lien entails and the potential consequences. So how does a federal tax lien work? When you owe back taxes, the IRS is going to first send a bill explaining how much you owe. And if you choose to neglect or ignore or refuse to pay this debt in time, the IRS can then file a public document called a Notice of Federal Tax Lien. This notice alerts creditors that the government has a legal right to your property. So let's break this down a little bit further into 2 points. 1, public notice, and 2, priority over other creditors. 1, public notice. I just mentioned that the IRS can file a public document. The Notice of Federal Tax Lien is a public record. So what does that mean? It's quite literally public, meaning it can be seen by potential lenders, making it harder for you to obtain credit. Why? Because the notice alerts creditors that the government has a legal right to your property. Number 2, priority over other creditors. The lien establishes the IRS's claim over your other creditors, giving the government first rights to your property over other debts that you may have. So quite literally, the federal tax lien gives the IRS's claim priority over other creditors that you may owe. So now that we understand a little bit more about how a federal tax lien works, let's consider the following. What assets are affected by a federal tax lien? A federal tax lien can attach to real estate, any real estate you own, including your home, and other properties can be claimed by the lien. Personal property. This includes items like, say your car, furniture, other valuable personal items. Financial accounts. A lien can also attach to your bank accounts, investment accounts, and other financial assets. So what have we learned so far? A federal tax lien is a legal claim by the government against your property. It can occur when you fail to pay a tax debt. And these legal claims can affect a wide range of your assets, including real estate, personal property, and financial accounts. Essentially, the lien serves as a way for the government to secure its interest in your property as collateral for the unpaid tax debt. And it does this by filing a Notice of Federal Tax Lien, which is a public notice alerting creditors that the government has a legal right to your property. In part 2 of our mini-series, we're going to answer the question, Why can a federal tax lien be a serious problem?